Hey guys, Mike here. So this is going to be a loaded video for you because I'm going to have a whole lot to talk about. We got the data coming out this week. We got Jerome Powell and them speaking. Also, I'm going to put in the latest interviews from Cem Karson and Tom Lee. You might be wondering, obviously everybody knows who Tom Lee is, but they did interviews on Friday with their latest predictions. And I'm putting both of them in this video for a reason. And we'll see if you can pick up on why that is. Okay, for those who don't know who Cem Karson is, if you're new, he's pretty much made quite a few calls over the last probably 5-6 months have been pretty dang accurate. He was calling for this 10% correction. He called exactly what was going to be the catalyst for this 10% correction. He called something out in January. He called it all the way in November for it to happen, and it happened on the exact day. So again, he follows flows and the VIX and all that stuff and volatility. And then Tom Lee, of course, follows all kinds of other metrics, and he's a perma bull. So again, we'll get into both those. We'll also talk about, I'm going to show you, why you know there's been no capitulation. Right, capitulation only happens when multiple things happen, but when you don't see this happening, it lets you know, okay, that we hadn't had the capitulation moment. And so, again, the philosophy is we're either going to get a relief rally going up, or we're going to get fooled and finally have capitulation happen, okay, which either way, I don't care which way it goes, but, you know, we'll look at all this stuff. And again, we also have something coming up here, right, that is in our favor. No matter what seasonality chart you look at, we're coming into an area where it is bullish seasonality. Even on the one I showed you about what happens when the market is greater than 20%, what goes into April, what happens in April, you'll still see on that seasonality chart that middle of March through the middle of April, still bullish. Okay, so we're going to go into all that right there. And when you look what I'm talking about, over the last 4 weeks, you can see hedge fund outflows, right? They've been selling. Okay, institutional clients, they're selling. What is retail doing? Well, they're buying. Okay, they've been buying over the last 4 weeks. You can see this really right here in this chart, which shows you here's retail purchases of U.S. stocks and ETFs. And you can see the crash. That's the dark line, the S&P, not the crash, but the correction, excuse me. And look what retail's been doing. And you can ask yourself, what have you been doing? Okay, been buying. If we get a real capitulation, this will not be the case. Retail will be puking in garbage cans, like I said, and they'd be selling out like crazy right now. And they are not doing that yet. Okay, so that's why another reason, as I've showed you before, we have not had capitulation yet in this whole deal, even though this is the 5th fastest time we've ever reached a 10% correction on the S&P. But here we are again, seasonality. Is it going to play out? It played out from February, middle of February to here, okay? And you can see middle of March going through April, so it's really good. April is usually one of the best months of the year for those who don't know. And then the VIX. The VIX does the opposite, starts to head down. What are we seeing now? VIX is trying to pull back. We'll talk about that in just a minute. But remember this chart here I showed you. For those who are new, you don't know what I'm talking about. Years following S&P greater than 20%, weak tax window performance. Usually middle of April and down, okay? But what do you see? From the middle of March up to the middle of April, still bullish. Still matches up with the sentiment I just showed you. I don't mean it has to happen. But if this happens, then I think that's what you're going to see. This is, and I told you this, monthly global economic policy uncertainty index. What is the market trying to price in? All this freaking uncertainty. It's at the highest level it's ever been. What is this? This is 2020. You look over here. This is 2018. All these peaks, right, mean something. Now there's 2022, by the way, but nowhere near where we're at now. And so if you start, something good or positive happens on tariffs, they get a deal worked out, or they just shut up about it and just let things flow. We don't hear anything until probably getting closer to April, when the retaliatory tariffs are supposed to kick in, then the market probably will be able to move to the upside, right? And you're seeing this as the best meme going around. I think it's going to continue to go around. Friday, what'd you see? Days without tariff headlines. Trump wasn't tweeting about it. He didn't roll his Commerce Secretary or the Treasury Secretary. They're talking about it. And so the market enjoyed that. You look over why we're actually been selling down. And I told you, it seems like it's just so like orchestrated, or it's so organized in how it's doing it. Well, CTA positioning is one reason for this. Okay, that's the commodity trade advisors. They manage billions. They're in the futures market, right? And you can see when you cross that dotted line, that's going into negative. It means they're going short. You can't see to the left, the number's too small, but right now, they're around negative 35 billion. Okay, the record according to Goldman Sachs, I was telling members, is like 50 billion. This is what creates short squeezes. When you start having a massive move to the upside, these guys are trend followers, so they won't come in at first. They'll wait to see what the trend is, right? Are we breaking the 5-day moving average? Are we holding above it? Blah, blah, blah. And then they'll cover their shorts and start to flow in. You can see it's been a while since they've been this negative. You can also see to the left of that chart when they were like about 10 billion short. All of a sudden they started covering. We had a big rally up the last time, but this is deep in negative territory, right? And so that's one reason you kind of see in this. Again, I think we all agree. You can see it on the volume. You can see what retail is doing. Hadn't had capitulation yet, even though the funny thing is, again, the 5th fastest time we've ever reached 10% down. Why? Why is it so fast? Never had a relief rally. It's rare to see. That's what I kept telling you. It's rare to see. And then when I read that fact this weekend, I said, well, that makes sense. Okay. And so let me know what you think about all that. Again, disagree, agree, came up with some other facts. Please let me know. I mean, I was talking to one of my neighbors about it. He's in finance, and we were talking about that stuff, and, made sense. Now, does that mean they continue to short down? Sure. I'm just saying the record they've had is like negative 50 billion. We're at 35 now. Okay. And so we'll see what they do there. But, now we're going to go into one, just for those who don't know who Jim Karson is. Again, we'll show you exactly what he was talking about before, what he actually predicts going forward as well. And then you lead into what Tom Lee said. And he does make one very good point, which is true. I fact-checked this. He's not lying. It really is true, okay? And so watch that, and we'll pick this up on the other side. These are really short clips.
The bigger decline at the end of the day is not coming, we believe, until really towards the back end of Q2 or even Q3. But this is a window for a potential unpinning event. Again, think a 10% decline, followed by a response, which would be likely by the Treasury and or Federal Reserve. That would then allow the market to knee-jerk rally back 10% or so near the highs. If we saw that, again, that would represent an unpinning of vol, and importantly, would be that initial shock that would then allow a bigger decline that might come in Q3 or late Q2.
What do you think about volatility here? Is it giving us any clues? Not volatility like choppy, like implied market option volatility.
Well, we had a pretty good, the administration came out and really told you what they were going to do. They're trying to take down the economy, take down the market. They weren't going to stand in the way. So it's well, documented. And so the volatility just hasn't been there. It's been a slow burn move down. The problem with slow burn down is if you have a hedge, it's not helping you here. And sometimes that can be the pain trade. Not the big vol explosion that everybody thinks. And for a lot of these hedge funds that are having the multi-strats that are having problems, that's probably the worst case scenario as well, because as the vol gets compressed, things start moving away from each other. You get dispersion and a correlation breakdown. So I think that's a little bit of what's going on. It's actually a pain trade. What's happening right now is the big boys are having to delever. They're being forced into these trades. So this is a deleveraging event. Like Mike said, I'd be a little careful here. I mean, I think you can get a little rally into the weekend. These are Vana charm flows, and we talk so much about these buyback of deltas as vol decays. We're heading into a big quarterly March OPEX. That matters. The skew decays, and that sends deltas back into the market. But those are structural flows, and when those go away, you may not have anything behind it.
One thing we have to keep in mind is when markets fall this quickly from a 52-week high. I mean, just remember, less than a month ago, we were at all-time highs. That is a market pricing in a crisis. I'd say we're almost 50% pricing in a recession, and we're assuming there's no Fed put. Now, the Fed is in a position to cut rates. That really should mitigate the downside. And I do think two other things that investors have to keep in mind, because many people just want to get out until April 2nd, is number one, I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the U.S. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the U.S. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses. Well, there's maybe two things I want the viewers to understand. The first is that this is a waterfall stock market decline. A correction in a month down 10% from a 52-week high, it's unusual. When we look back at waterfall corrections, and it's a piece we did 3 years ago, the market tends to make a symmetric rebound. That means we could be back at all-time highs in 6 weeks. So for anyone who thinks that they've lost 10% and it'll take them forever to make that back, if they are patient, they might make that back in 6 weeks. The second thing is something that we call the rule of 10 best days. The 10 best days in any calendar year make up the bulk of gains. In 2024, for instance, we were up 24%. Excluding the 10 best days of that year, we were only up 4%. So anybody who's trying to go to cash because they're going to wait till April 2nd may miss out on, 15% of the price recovery. And so I think people really need to be patient and just not trade or out-trade themselves.
And so you might have noticed those two are actually aligning, right? Where, of course, Tommy's always calling for a rally, but he gives his reasons why. But then even Cem Karson is talking about, obviously, we don't have March OPEX here right now. It's coming up this week. So we'll see how the flows are. We'll see if they're supportive and all that good stuff. But even he's not calling for this to be the crash. I don't mean we're going back to all-time highs, right? We can just have a rally, hang out, be choppy, whatever it is, and all that good stuff. And then later on, okay, have the move down, which basically, if you look at 2018, that's the playbook. That's what we're following so far. Okay, it had a big correction, came down, had a couple 8% drops, chop, went on a massive rally through like July, and then we had the 20% drop from October into December. Okay, now what are we looking for? It's very simple checklist here. Again, we're coming down. This is the SPX, S&P that is. And you're seeing the 5-day, right? Got to get above. We close above the 5-day. Need the 5-day to curl up, right? Start to show momentum to the upside. After you get through that, there's your 200 moving average. It is not even far away from the 200 moving average because of Friday's movement. Okay, we're like 2% away, 2.5% away from the 200. And so that's your next one to look for, okay? The VIX. The VIX started to come down. Again, to have a sustained rally, this really needs to drop, down to past 20, then 18, then 16, okay? That's what you're looking for on the VIX, okay? But if it stays above 20 or starts heading back up, no sustained rally is going to be seen, okay? Just keep that in mind. Also, if you look right here, gamma flip. I don't know where it's going to be tomorrow, but if we somehow are able to rally up past that 200 and then get in the positive gamma territory, then yes, you can have a sustained rally for sure. Okay, you can also have gap ups after that. Okay, the market really loves being in positive gamma, so that is something else to look out for. Again, I put that in the morning news brief every morning for the members on that one. So that is check, and check is what we're looking for. We're looking for some check marks. Okay. The other big question is, I don't know the answer to this. Nobody knows the answer to this. Only Trump and the administration does. If the 10-year rallies with the market, if the market does move up and the 10-year goes with it, are they going to stay quiet? Or are they going to say, oh, heck no, we got to get the 10-year down? Now, the 10-year does not have to rally when the market rallies. Okay, it has nothing to do with that. But if it starts to go, will they sit there and be quiet? Or will they try to knock it back down, which normally it means they're probably going to try to knock the market back down with tariff talks or whatever. Okay, just kind of keep that in mind. We got to find out. We don't know. Now, looking at this, like I said, everything, all the signs are there for a relief rally. I will call it a relief rally, a short covering, whatever you want to call it, until otherwise. Okay, it has to prove itself to me. But you're sitting there with the NASDAQ at a 2-year trend line now. It hit it 3 times just in the last week, and it held. Okay, so again, this is a NASDAQ composite, has many stocks on it. This ain't the QQQ. And so again, if it starts to move back up, the one thing you don't want to see in the S&P or the NASDAQ, you don't want to break the previous low. If you break the previous low, we're in deep trouble. But right now, you're just looking to move up, get past the 200. Actually, the 5-day moving average, then the 200. But you can see right here what it do. It came down into this daily fair value gap right here, came down that trend line, and that's where it held. Okay, that is not a bad thing. And so a lot of these are lining up. You're seeing it on other stocks, which I'm going to show you, and it's not even that big move up to even get to the 200 moving average. Remember, this thing is down 14%. And if these MAG 7 or 8 or whatever you want to call it start to move back up, then it's going to take no time to get to the 200 moving average because they're so heavily weighted. Again, here's the 5 stocks we talked about. Again, you have these trend lines of death, but here you need the 5-day moving average. What to do is basing out. This is a daily chart. So you got 4 or 5 days, or so 5 days of it just basing out right there. Got rejected this trend line. If this opens up in positive territory, we start to move up. Then you start looking at different levels. 402. That brings you to 415. Again, second, third heaviest weighted stock, depending on which ETF you're looking at. But as far as the SPY is concerned, it's Microsoft, Apple, Amazon, NVIDIA, then Amazon, then Meta. Okay, Apple. This one actually looks the worst out of all of them. This is not even close to its 5 days. It's not even curling at all. So, but you need at least Apple. I think Apple and Microsoft kind of tell you what's happening in the market right there. Amazon we talked about. This one right here is closed above the 5-day moving average. The 200 is right there. Got rejected multiple times. Again, a trend line of death, But if you start seeing these mega caps start to break these trend lines of deaths to the upside, getting above the 200, then you're going to start to see a push because most of them are in a major discount. Again, it could be a relief rally, a temporary rally. Okay, so don't get all, oh my God, we're going all-time highs. Maybe we are. Who knows? But look what's telling us here. Look at NVIDIA. NVIDIA's already got the 5-day curling up, 3 days above it, and that's what I told you. When you get above that 5-day, man, and I showed you what it's done in the past, they can start to move. Okay, because it's in a major discount. Beaten down, bearishness, nothing but bearishness, and all of a sudden, it's 5 days already curling up. So that means momentum is trying to push to the upside. And you got Meta. It's 5 days trying to flatten out. It's trying to get above the 5-day moving average. This one got knocked down 20%. Even think about this. How do tariffs affect Meta? Does anybody know? What do they import, export? Nothing, right? They don't even have to have human beings running their business. Yet they're getting knocked down. But another reason why you haven't seen capitulation is because you see like some high beta stuff that's still just holding where it's at or it's going up. All right, that doesn't happen in capitulation. The high beta stuff gets absolutely obliterated. No matter what's happening, okay, but that's not happening, right? And so with Meta, that trend line is going to be, the big deal. Why do these 5 stocks matter the most? I told you, 20% of the S&P are these 5 stocks. 1/5. Google, you want to add this one in? It's another Mag 7, Mag 8, whatever you want to call it. Sitting on a 1.5-year trend line, bouncing right here multiple times on that trend line. Major discount, already got rejected to 200. And so this is another one to watch out for. It needs to hold that trend line. If that trend line breaks, yeah, things are going to get ugly for Google, that's for sure. There's no doubt about that right there. I know people have been buying this one for the last week and a half now. And so we'll see if this is going to move. But again, two things are going to happen. Weekly chart right here. You got a weekly fair value gap below right there. And you also got a weekly fair value gap above. Which one is it going to target in the next week is going to be the big question. Now, RSP, equal weight ETF, trying to get the 5-day to curl, right? This is when we know oh yeah, this is when the breadth is increasing and when these are going up, right? QQEW is another one. So these aren't affected by the Mag 7, Mag 8 because it's an equal weight ETF. And so you want to see this. This gives us participation. If you can get these ETFs moving up, it means more stocks are moving up. So it's not as much weight that goes into the Mag 7, Mag 8. They don't have to go crazy moves up. They just need to be positive, all right, to allow the market to move up. Again, this is another trend line of death. It's right there at it. It closed above it on Friday. And so we'll see if we open above it on Monday. I haven't seen the futures yet. They haven't opened, but again, we'll see. Now, there's no real major earnings, honestly, compared to what we've been through. A couple, I definitely want to keep an eye on for sure. You'll get retailers and stuff like that happening here. Some high flyers as well. Monday, I don't really see anything going on. In the morning on Tuesday, XP, watch out for that one because that one's been doing really well. I showed you this chart last week. You go over to Wednesday here in the morning time. You got some, General Mills. Look at that one. Ollie's again. Because General Mills is kind of like a Staples, right? We'll see what happens with that one. Then you got the retailers, 5 below, a few others going on that day. But then you get into Thursday, here's, I think that's PDD if not mistaken, Jabil, Academy Sports, Darden Restaurants you really want to listen to and see what they got to say. They own a boatload of restaurants in America. Micron's going to be a big one. Nike's another one. FedEx, because we know transportations have been getting destroyed. Lennar's home building. And then, of course, watch NEO, see if it can pull an XP. And then there's Carnival Cruise Lines. Let's listen to see if we're still traveling, if we're still seeing record tickets and all this fun stuff and what they got to say about that, okay? Now, looking at the data, this is the big stuff we're going to be looking at. Monday, we got core retail sales month over month, Empire State Manufacturing, business inventories we'll pay attention to now more than ever. Tuesday, building permits, housing starts, import prices, okay? Industrial production is another one I'll be looking at. Wednesday, oil inventories, federal, and this is it, the Fed funds rate right here. The meeting, Jerome Powell, all that fun stuff is going to happen on Wednesday. Then Thursday, unemployment, Philly Fed Manufacturing Index, existing home sales, CB leading index. And then Friday, nothing but a Fed speaker. So we'll definitely be busy. We'll give a shout out to my man Dave, trying to start his YouTube channel. He's been a member and stuff, great guy. And I always support people who are good people. And so check out Dave, the Trade Swift Options Trading. And so I just want to give him a shout out. Click on it, see what you think and everything. And I think he's trying to do the same thing I'm doing, really just, trying to educate people, maybe in a different way, really, especially when it comes to trading, things of that nature. So check him out, man. Good guy, and I think you'll actually enjoy it. I was watching some of the videos the other day. So I always support good folks, and I think, you should too. So anyway, Hope you hit the like, subscribe button. Really appreciate it. Let me know what you plan on doing this week. Think about signing with a membership. Less than McDonald's combo. That's everything you get with it. Let me know if there's anything I can do for you in there. And I will see you guys tomorrow for another fun one.